And these are the conditions you get once you see the delivery of a objective on a setup. Again, getting back to that sell side here, because it's done so before the 9:30 opening. This right here, this is exactly what makes the morning chop at the opening. This is what creates that condition. All these factors together, because it's already delivered what would be reasonable in terms of a very high probability, low resistance liquidity run signature. It just means, in plain terms, easy language, it would be the easy setup going short has already happened from over here, and it went to target. So since it's already done so before the markets open at 9:30, that means the market's going to chop around until it can establish more sentiment. Right now, in my opinion, they're trying to force the narrative that it's going to go lower. And they like to do that with presenting relative equal highs like this. So that looks like what? Oh, it stopped here, and it starts to drop down. So that means what? This is resistance, right? That's what a retail trader sees. That's what street money sees. What's resting above those highs right now? Buy side, buy stops. So ripping above that and the volume imbalance, how far can it go above that into this gap here? Trouble, the struggle, the difficulty in reading this, which is exactly when you identify it like this. Here's what you do, okay? You close your trade right as soon as you discover that you're in these types of environments. Close your trade. But ICT, I'm under. Close your trade. Close it, because you're going to end up spending more mental capital than you're going to make in realized profit. Even if it goes to your target, you're going to spend more time worrying about this trade when there's so many other very good setups that aren't going to force you into something like this. When does the market chop at the open? When it's already delivered its move pre-market. And that's what you're seeing here. And then it becomes a 50-50. It could go up to that red box. I'm hoping that it doesn't, because I want you to see me get it wrong in this context, in this condition, because then it'll prove to you why I'm teaching you the way I'm teaching you. If it goes up there, you're just going to think, well, he just got it right again. I don't want that actually to occur here. I want to be wrong. I want to be wrong and say, see, this is why that condition is exactly what you should be fearful of as a trader. This is the thing you should be fearful of. Falling victim to this, insisting on it's going to go where you want it to go. Versus, okay, this is more work than it needs to be. Let me just close it and I'll come back at another time where it's cleaner. What does that mean, cleaner? When price runs very efficiently. It doesn't waste a lot of time. Retracements go to specific levels that are predetermined. We can see them. It has visibility to it. And it's easy draw. Where right now is it more likely to go to? Is it easier for it to get to 41.21 or to get to 41.0650? It's 50-50. Either one of those scenarios I could make a case for right now. And whichever one forms, the people that side with that, they will think that that was skill, and it's not. We're outlined here. If the move delivers before 9:30, expect 9:30 to be choppy and trade the afternoon session. Done. Simple. That's why also sometimes you see me entering and doing trades before 9:30. Why? But you said the idea should be we should be trading. Yeah, you should be focusing on 9:30. And if there's news at 8:30, focus there too. But if the moves form a setup before that, there's nothing saying you can't trade 7 o'clock to 9 o'clock in the morning. If the framework is offering it to you, there's your setup. But by doing that, know that when 9:30 comes and the U.S. equities market opens, it's usually the opening bell, ding, ding, ding. CNBC, whole business makes a big deal about it. When that occurs, this is what you're likely to see, this type of messiness. And you don't want to look at this and trick yourself into thinking this is opportunity. It is opportunity. It's opportunity for you to hurt yourself. Do reckless trading, churn your account for the broker's sake, and you lose it. or create drawdown. This is exactly where it creeps into your trading.